Let me ask you something. What if I told you there are 9 stocks in India that brokerages believe could deliver up to 55% upside? Sounds incredible, right? But here's the truth. It's also where most investors go wrong. Because in the stock market, big upside numbers often hide even bigger risks. Recently, reports from Motilal Oswal and Sherakan highlighted 9 companies across sectors with strong upside potential: FMCG, banking, IT, consumption, auto. Everything looks perfect on paper. So the real question is, are these real opportunities or just high expectations? Let's break it down one by one. First, stability. Marico. Simple business, everyday products, no hype, just consistent demand. Margins are improving slowly and steadily. Upside around 18%. Now, the opposite. Forge, highest upside on the list, around 55%. Strong order book, great execution history. But here's the catch. When expectations go this high, even a small miss can trigger a sharp fall. Next, India's retail growth story. Trent Limited, Zudio, Westside, expanding fast, riding India's middle class consumption wave. But remember, growth is never linear. Volatility is part of the journey. Upside around 20%. Now, a cycle based business. CIE Automotive. This story depends on one thing: auto demand cycle. Demand rises, earnings grow. Demand falls, expectations break. That 20% upside is conditional, not guaranteed. Let's talk banking. Punjab National Bank. NPAs improving, asset quality getting better. But trust takes time to rebuild. Upside around 40%. Now, a quiet performer. City Union Bank. No hype, no noise, just disciplined growth. Sometimes these are the real wealth creators. Upside around 45%. Now, consumption power. Warren Beverages. Demand is booming, expansion is aggressive. But here's the trap: good news is often already priced in. Any slowdown can hit the stock hard. Upside around 40%. Now, a classic name: IPC Limited. Diversified, stable, strong cash flows, and consistent dividends. Not fast, but reliable. A true long term compounder. Upside around 35%. Finally, rural India. Mahindra and Mahindra Financial Services. This story depends on one factor: rural recovery. Good monsoon, growth improves. Poor monsoon, NPAs rise and expectations collapse. Upside around 50%. Now stop. Forget all the percentages, because this is where most investors fail. They chase numbers instead of understanding businesses. These are not guarantees, they are possibilities. And in the market, possibility is not reality. Real returns come from three things: search, patience, discipline. This video is for educational purposes only, based on publicly available brokerage reports. This is not investment advice. Please do your own research or consult a SEBI-registered advisor. Until next time, stay calm, stay informed, and invest wisely. If you understood this, you're already ahead of most investors, because in markets, returns don't come from hype. They come from clarity. Now tell me, would you chase 50% upside or wait for the right price? Comment below and don't forget to subscribe